Hi, everyone, and welcome back to the Finance podcast. Today's guest is Marcus Ryu, general partner at Battery Ventures and co-founder and former CEO of Guidewire, the software platform that became the epitome, the industry standard for property and casualty insurers worldwide. Marcus spent nearly 2 decades building Guidewire from a startup tackling one of the least glamorous corners of enterprise software into a public company worth billions today, taking it through an IPO in 2012 and serving hundreds of insurers across the globe. In 2020, he crossed over to the other side of the table, joining Battery Ventures on the investing side, backing the next generation of enterprise software founders. I am so pumped to have the Silicon Valley legend on the podcast. So without further ado,
Mhm.
Marcus, welcome and thank you so much for joining.
Thanks, Logan. Pleased to be here.
I want to begin, Marcus, by kind of the bulk of your career, which was at Guidewire, but how you were mentioning the story of how you became more of a salesman, especially in the early days of Guidewire, and your approach to winning customers. You mentioned mainly how you had to sell your intelligence and the vision. But I wanted to ask about the other side of it. In those early Guidewire days and when every
Mhm.
dollar mattered, what was it like losing a deal you'd spent days, months on? And how did you personally process rejection? And what did failure teach you that winning never could?
Well, rejection is at the heart of the entrepreneurial experience. If you can't handle rejection, you better find another line of work because most of your day is spent getting rejected. In fact, it's not even rejection. You're spent being ignored. You're treated with indifference. And, in a world where we're all more distracted, all more crowded with inbound requests, the norm is for just no one to answer you. And it can feel like a deafening silence. And if your ego is fragile, or if you are used to getting lots of positive affirmation and you need that to get through the day, you really have to find a different profession because it's going to be miserable or even more difficult. When we embarked on the journey, we knew we were selling to a very difficult end market. Insurance companies are large, they're conservative, and we were asking them to make a very consequential, high risk decision. And we had no real credentials in the beginning. So the default is to be ignored or to be rejected, and it would take an astonishing alignment of the stars for someone to even take the next step with us, let alone go the whole distance. And there were times in the early days where I felt, the chance of us actually getting someone to buy our software, felt like jumping to the moon, some kind of impossible task that the laws of physics would prevent. So how do you cope with that? The only answer that I could come up with that we had as a founding team is you have to redefine success. You can't say that success will be when we're a multi-billion dollar company. You can't say success is when we're industry leader. You can't even say success is when we have our first customer. You have to say success is when we have a certain number of meetings, a certain number of interactions that are promising, when our product gets to something that's within our control. And you have to constantly frame a kind of definition of what achievement means so that that you're not devastated by the distance ahead of you. And, this is very common human practice when you're undertaking something difficult. If you hear what mountain climbers or ultra marathoners or anyone undertaking something really difficult do, they segment the journey and they identify something that's within reach that might be difficult but is achievable so that they have some chance of making it through psychologically.
Well, now I'm curious, Marcus, because another point you always make on
Mhm.
your podcast is
Mhm.
your brothers, your other co-founders, and how you guys separated over time. You
Yep.
were there the longest at Guidewire, and you just mentioned achievement and
Mhm.
looking forward to a goal for you. And I was really curious because I don't think you ever mentioned in your interviews,
Mhm.
but why'd you keep going? Yeah, like why did you feel like there was more to chase, more to finish, more to achieve when it seemed like you did everything possible from a startup to a public company to being
Mhm.
worth $10 billion?
Well, people have different motivations. For some, they have a vision of who they want to be, or that they feel their destiny is. Some people are, attracted by the intrinsic glory of solving a certain kind of problem, or whatever it might be. And I respect all those motivations. In truth, that wasn't the case for me. For me, my motivation, and it's just being truthful, was terror of failure. The horror of having promised that I would succeed at something, that I promised that the company would be a great place to work to the employees, promised that we would build a great product to our customers, and somehow wouldn't fulfill that. And the horror of that possibility was more motivating than any positive thing that we could achieve. And that sounds dark. Maybe I've met founders who say the opposite, but that was
Yeah.
true for me. And so even when the company was, by any objective measure, very successful, I still was oppressed almost by the huge set of other promises. You're always making a promise to the next horizon. There's always some other vista, and you have to enlist people into that journey. And whatever has been achieved, now you're at this base camp, and you have to get to the next one, and there are promises to be fulfilled. And the concern, the fear of not achieving that was a huge motivator, and that did keep me in the journey for about 20 years. And I think it was only the kind of a very specific set of circumstances that are beyond the scope of this discussion, but in COVID and other unique conditions that led me to change gears. And even that, not a day goes by that I wonder if I made the right decision.
Do you feel like at times did you feel like you were the only person that could do
Oh,
the
yeah.
job, if that makes sense, in regards to like your own personality, the way you were driven? You were like, I'm
Mm.
the only one that could run Guidewire and lead it to being successful and never letting anyone down, whether that be employees or your
Yeah,
C-suite.
absolutely. Yeah. And every founder or most founders that I meet have very much that same conviction. It's something that I think was completely underappreciated in my era, and then maybe today arguably is overappreciated, where we treat founders like they're the next messiah. I don't think either of those are true, that they are just guys who happen to start a company, or the only ones that could possibly make a company successful. I don't think either are quite true, but there is something very specific to the founder energy, which is that you have pledged your identity and your honor to the success of this enterprise. And that's not true of other employees, no matter how devoted they are to the company. They've not merged their identity with the success and the promises of their business. And so that gives you a very specific place in the company's journey. And going back to sales, it allows you to do something that no one else can, which is to pledge the entire company, which is to commit it in a way to customers. And that's kind of a superpower. It's not really your intellect or your work ethic or your insights, just the fact I can promise everything that this organization will be in your service. And often that's what you need to do as a founder.
So a standard that you upheld and you know that works and works for you. And I guess when you kind of look back at your time at Guidewire, right, over two
Mhm.
decades, you're someone who believes success comes from rigor, true hard work, not truly gut
But
instincts.
there's a lot of luck in life too, but yes.
Oh
Yeah.
yes. I guess when you look back at Guidewire, was your biggest misstep failure of analysis? You got the thinking wrong, or failure of nerve? You saw it clearly and didn't act, especially considering, right? You mentioned, the Accenture case and other situations that happened at Guidewire.
Well, there were so many mistakes, and I mean, there were hiring mistakes, there were market positioning mistakes, market entry mistakes, investors' choice. There's too many to count. You can't live a life, start a company without making mistakes, and you can't live in terror of making those mistakes. I always tell founders today that whatever you're trying to solve, the hardest problems are human problems, and the mistakes that I have the most acute regret about were all about people. Cases where I underestimated someone or overestimated someone, or made the wrong call about whose opinion was actually more worthwhile in a given context. I think the one thing I felt most naive about when I look back at the journey, like if I could be,
Mm.
the ghost of Christmas past, looking back at, at my younger self during those days, I would have, the thing that would feel most poignant for me was how earnest we were as a group, and how we felt that we were so enslaved to our investors. We felt that they had all the power, and that we had to please them. And I can tell you, founders don't feel that way today, and I don't really think they should, though sometimes it can be extreme, their sense of entitlement, but that's okay. But I think that we were unduly oppressed by the concern about trying to keep our investors happy. And I regret that, because it was a misallocation of energy, and then sometimes it distorted our strategy.
Yeah, no, I could see how that would be very daunting.
Mhm.
But I guess to end more on a good note
Mhm.
of your career, and Marcus, I don't think you know this, but in a lot of your podcasts on YouTube, you always find a comment of a Guidewire employee or a former Guidewire employee, and they talk about how you treated people with respect, but most importantly, I thought it was pretty interesting. They said a few of them teared up when you
Mhm.
stepped down as CEO. I think that says a lot about who you are as a person, the impact you had, and something to be extremely proud of. So, I wanted to talk a little bit about culture and
Mm.
how did you think about building and protecting it while scaling Guidewire into the company now nearly worth 10 billion, just given that the easy thing at every stage is
Mm.
to prioritize growth.
Yeah, well, I mean, it's a cliche that that a business is made up of its people. That was certainly true for us. The, we had this very high-minded idea in the early stages of the company, and I really tried to extend and exemplify this over the years, that we were a company like that were, attached to principles, that we were there as a federation of people who believed a set of things, and that's what made us together. And that's a kind of high-minded ideal of what a country is, of what America is, right? It's not, proverbially, it's not the color of your skin or your origin. It's because you relate to your identity as a citizen and a certain set of values that define what it is to be an American. At least that's the version of this country that I feel most patriotic about. And that's the way we saw the company. And in our case, the values, which anyone at Guidewire should still be able to tell you, because I talked about them relentlessly. They were inscribed on the walls. We use them as descriptors of why we made decisions. Was that we will always behave with the utmost integrity, which means just the plain, simple, radically simple truth to all parties, to investors, to customers, and of course to each other. Secondly, rationality, that we would make decisions not based on hierarchy or gut instinct or impulse, power. We would make decisions based on the truth, and we would create a truth-seeking organization where the facts would win. The facts would always predominate. We'd be an empire of reason, which is, to put it in a very, very high-minded, somewhat pretentious way, but I used to talk like that. And then third, collegiality, which was my term for we would be a group of professionals that work together as radical equals to the maximum degree, that we treated each other as ends, not as means to an end. And so these were our values. They're very high-minded, but what use are a group of values unless you adhere to them when things get difficult, when it's more convenient not to adhere to them? And I think what bound a lot of people to the company was to see the leadership of the company stick by the values, even when it was obviously not convenient, even when it would be so much easier to tell the customers something that was not true, or to make some expedient decision about people or whatever it might be. There were so many examples, and I think that to my great satisfaction, to my great pride, really bound people to the company. They said this is a place that that stands for something. Even though the business was building core financial systems for insurance companies, that has its own interest. It's a very worthwhile thing to do. It's not something that people develop huge moral excitement about. It was the way that we worked, and a sense that we were part of something larger than yourself, that stood for something that I think bound a lot of people to the company.
Do you feel like this standard of kind of what you held your employees yourself to, do you feel like that's applicable to most companies, especially startups, now that you're out that scene?
Absolutely. I mean, that's what I wish every company would bring. When I meet founders today, or I'm involved with companies, a lot of times they'll have a list of values, and their values will include things like with great speed and urgency, and we're going to crush the problem, and we're not going to take second best, and et cetera. And they're basically intentions to be highly competitive, and to work with intensity and so forth. And I think that's all admirable, but I don't think those are values, right? I think those are practices. Those are, a kind of team spirit that you want your organization to have. That's different from values, because values are principles that you adhere to even when it's not convenient. They're not just a preference, right? And I think that they matter. They may not matter when things are good. The company's winning, you're crushing it, it's growing fast, investors love you, then they seem like an afterthought. But most of the journey is not like that. Most of the journey is difficult. It's lonely. You're toiling in obscurity. Things are not working out exactly the way you want. And the resilience of an organization during those times really does rely on its values, in my opinion.
Absolutely. And now jumping more into, recently when you joined Battery, I am curious, so why did you join Battery? And I guess, why,
Mhm.
why not retire? I know it's a silly question, but
Yeah. Well, I can speak to why not retire, because work gives us purpose.
yeah.
And I had a very brief spell. I was exhausted in 20 years in. I'd taken very, very little vacation. I had paid a very high personal price, and my family had as well. And I needed some interval to try to reconstitute myself and see the world anew. And within a year, I had a terrible sense, and this was during COVID, which is a surreal time, but that my relevance to this world was already decaying really fast.
Mm.
And I did not like that trend. And I realized, to be in this world and to be relevant, you must engage it. You have to work. And as it turns out for me, consuming things does not bring any enjoyment, or it brings very little enjoyment. You cannot consume your way to happiness, and at least I can't. So it requires finding something constructive to do. Why, to answer the first part of your question, why join Battery? There's, I guess, two parts. Why join a venture capital firm? Why be an investor instead of, say, start another company? And then why this firm? Why join? Why become an investor? Along the way, I met a number of founders. The first up through the IPO, which was about 12 years in, it had been extremely lonely. I felt, I'm an N of one that's experiencing this. And that turned out to be untrue. That as I met many other founders, I realized there's a deep universality to this experience. And I derived enormous reward from the empathy of interacting with them. And then in some cases, being somewhat of a mentor, or at least someone that would help them avoid the dumb mistakes I had made. And I realized I wanted more of that. Now, while I was leading the company, those kinds of interactions happened somewhat randomly. It was just someone who knew someone who thought I should talk to them. And I said, if I want to do this in a really good way, I have to be systematic and I have to be part of a real platform. And I was invited to join a couple partnerships. And eventually then, why Battery? It's a firm that's been around 40 some years, which is a long time in venture capital. It's survived through, many different tech cycles, boom and bust. And it's gone through multiple cycles of partnerships, multiple generations, which is kind of rare. And it does very kind of unglamorous, fundamental underwriting that I felt a very strong intellectual affinity to.
Yeah.
So, it led me there. They also, by coincidence, led the Series C in my company in 2007. And so that partner, who is now my partner at the firm, Neeraj Agrawal, essentially recruited me in, and no regrets.
Amazing. And I guess you've noted, and taking more into account now your time at Battery, you've noted it takes about a decade to know if you're any good at venture. You've been at Battery since 2022. What's the early signal, good or bad, that's already telling you something about yourself as an investor?
Well, you don't know you're really good until you generate results. Just like you can think you're an incredible entrepreneur, but if you start multiple companies and they fail, well, maybe you were unlucky, but the indicators are not great. So same in investing, and so it's far too early to tell. And I hope I'm good at it because I'm competitive and I want to be good at anything I try. The one really positive signal, which has exceeded expectations, is that I think founders really, really want to talk to investors that have walked the walk, that have some kind of first-person empathetic understanding of what it is to be in their seat, of the stress of it, the agony at times, also the search for glory. And, it's my analogy, and I don't mean disrespect to anyone who's actually, worn a uniform and, and been in harm's way, but I think it's like being in a war. People who have actually experienced combat, there's a dividing line, those who've experienced it and those who haven't, and you can't cross that line. And I think there's some, maybe, I hope it's not a disrespectful analogy, but something like that with having been an entrepreneur. And I get to draw on that. I get to say, I've walked the walk that you have. And it turns out to be very persuasive, both at the time of, am I the right investor to work with? But then even after the investment, I can say things that I think are harder for a pure financial investor to say. Things like, look, I've been in that situation before. I think that respectfully, I think you're looking at it incorrectly, or you've overlooked this. Maybe you want to think about that. And it's easier to say that when you've been in that seat.
Marcus, I have to ask you because I mean, this is just something I've been dying to ask, but I think partly I'm like iffy about it. But I've seen a lot of venture capitalists, they're past, they're past investment bankers and they only did investment banking or they only did management consulting and, they were to break into VC and they've been doing it versus someone like you and many others that have started companies, successful companies. You would think they're the best kind of investors because they were operators. They can be more helpful. So I guess I'm curious from what you've seen and people you've worked with, does it tend to be the best investors are the ones that were operators?
I don't think that's necessarily true. I think they're fantastic investors who have done this just professionally their whole career. I mean, it's true of all my partners actually at Battery. I think that the there's trade-offs in life. When I've already learned an enormous amount in these few years, it's a kind of perspective that you don't get when you are, in this first-person intense journey to build your own company. As a financial investor, you start to see things a little more dispassionately. You see them more laterally. You look at,
Mm.
you look across comparison cases. You see a pattern that you just never think about when you're in the trench trying to build your own company. So that's a kind of third-person perspective. I, of course, live the first-person perspective of having, tried to do it myself, single-threaded through one thing. I would think the optimal investor, if you could craft one, would be a mix of both. And that's the investor I'm trying to be, one that has empathy, that first-person empathy, that third-person dispassionate object, kind of pattern recognition, lateral view. And in theory, that should make me make me a very good investor. We'll see. Again, there's a lot of luck. You only get to take a few shots, and there are thousands and thousands of companies, and the world's
Right.
an uncertain place. That's what I would think. One other thing I'll say is, a lot of founders, and I was like this too, very resentful of a certain kind of investor that
Mm.
sees their company just purely as an instrument, right? And appraises it purely in terms of its, essentially looks at it on a spreadsheet. And I don't think investors do that as much today as they used to. But I think there's a way you can really alienate, the entrepreneur by seeing it that way, because, that's just a precipitate. That's just a byproduct of what you're
Mm.
actually trying to build. And you can see certain signals in that, but it never tells you the deep story of what's happening in the business. Nonetheless, I think many founders disdain that kind of analysis, and there are often really deep insights you get from understanding a company's metrics well analytically.
And then kind of taking all of that into account and also your own experience with your investor board, I was curious, founders always hear value beyond the check from every firm. I guess, what did you personally want more from your investors when you were at Guidewire that you could actually got and that you never did get? And then how do you think entrepreneurs should pick the right partner?
Yeah. So a lot of firms, mine included, will say, hey, there's these other things, these other kind of services that we offer that we support our portfolio companies with. By the way, that didn't exist in my era at
Hmm.
all. It was like, you should be grateful that we're writing you a check, and now you better make it worth more, or you're a failure. That's not the sentiment today. Now it's, the balance of power has shifted very much in favor of the founder, of the entrepreneur. And so investment firms like mine have to make the case that we're going to do more beyond.
Yeah.
And I think those services are great, and Battery has some great people who really do help our companies. However, I think that's a very small fraction of what really matters in the relationship, because it's really a marriage of sorts. It's a professional marriage that's going to last, many years, sometimes 10 years, sometimes longer. And it's about but a particular kind of authenticity and empathy in that relationship just isn't a good marriage. The role that, it's simplistic to say, and sometimes founders think they want this, and sometimes investors try to please them by saying, we're just in your, we're in your camp, we're your cheerleaders, we're here to do whatever it takes to help you be successful. I don't think that's the right answer. Think of it this way, like, if your parents, would you want a parent, is it a best parent who just says, I can support your kid, you can love unconditionally, but that doesn't
Yeah.
mean you support every decision your kid makes unconditionally, that you think, whatever they do must be right. Now, I don't think the relationship is one of a parent, but it's a relationship in which you have to be able to speak truthfully to each other, while being respectful of the fact that it's only the founder that actually, or the founding team, the management team, that's actually making the decisions, that's bearing the risk, that's going the distance. And I think the quality of that interaction is something that's essential. Now, one little frustration I have in today's era is that founders say that they want this, but I see them overwhelmingly pick where they get the highest valuation. And I think that that's unfortunate. I
Yeah.
can't, it's not my, you have to meet the market where it is, so I cannot change that. But I think it's often short-sighted, because a somewhat higher valuation is almost worthless compared to, well, when times get tough, and in comparison to having the right relationship with your investor.
Now, when you take that into account, I will definitely say I've
Mm-hmm.
met a good amount of entrepreneurs that really, really like their valuation and kind of ended up
Mm-hmm.
picking certain investors because of that.
Yep.
And when you're meeting a founder, an entrepreneur, what's the single fastest way they lose your conviction?
Mm.
And is it even something you can control? Like, what do you truly look for? Is it the grit, the personality, that sort of thing.
Yeah, so there's two sides of underwriting a business. There's underwriting the business, the idea, the
Mm.
concept, the quality of the current, financial traction, market traction, et cetera. And then there's underwriting the team, underwriting the human side. They're equally important. They're equally challenging, different approaches to both. So there's a kind of straightforward financial forensics on the business and so forth. And that has to clear a certain bar in order for this to make rational sense as a possible. There has to be a venture outcome.
Yeah.
And there are a lot of businesses that are perfectly reasonable, but they don't deserve venture capital because you have to be at a certain level of growth, a certain kind of trajectory to justify the high price and the risk involved. And so there's that basic underwriting of the business. Is there potential for a venture-like outcome? And sometimes it's evident in the first few minutes that that's not going to be the case, or very
Yeah.
high. On the human side, and I think that was the heart of your question, the thing that I care about the most, and I'm speaking for myself here, is the strategic coherence. Is what is the clarity of thought that is being expressed here? How acute is this diagnosis of the market? How coherent is the thesis about what's deficient and what could be fixed? How plausible is the plan and the angle of attack to make a difference? And how logically does it unfold into creating something that compounds in advantage and in value over time? All of that latter stuff, it can be expressed on a single sheet of paper. A founder should have understood it so deeply that he or she can express it like they're saying their name. And it should be intellectually resilient, meaning that
Mm.
you can challenge it from any direction and there's thoughtful answer. It doesn't mean perfect answer, but thoughtful reply to it. And that's kind of the main thing that I seek in these discussions, especially in the initial meetings. And I'd say a lot of founders fail right off the bat because they have the excitement, they have the drive, the intellect, the educational credentials, etc. But their theory of the market and their theory of why they will win is often shallow, and it has it just hasn't been articulated clearly from premise to conclusion.
And then some more and kind of the entrepreneur and
Mm.
everyone wanting to start companies and build
Mm.
company. I mean, right, Marcus, YC is,
Yeah.
it's a lot. It's a lot of companies. So
Yeah.
I was curious, you said in your recent interviews that today's environment is much more supportive in founders, and I do
Mhm.
feel like that is true than when you started Guidewire, but more competitive in every dimension,
Yes.
net. Is it actually easier or harder to build something enduring now than it was in 2001? And do you
Well,
think it's more saturated now?
it is both easier and harder. What does that mean? The times are incredibly favorable, have been
Mm.
unbelievably conducive in a way that I could never have imagined for people to start a company. You don't need almost any credential at all. And there are approximately 10 times as much risk of venture capital. There are probably about 10 times more firms than there were in my era. Valuations are incredibly supportive and kind of risk favorable for the founders. There are unbelievable number of assets, knowledge assets, social networking assets,
Yeah.
so that you can not feel alone in the journey. That you can never be you can never be mystified by what it takes and what success looks like and what the metrics mean. In my era, and this sounds crazy, but we didn't even understand, the basic financial and legal terms that were being presented to us by
Yeah.
investors. There was an enormous information asymmetry, and all of that's gone. So everything is very, very, very favorable for founders in that sense. It's also much easier, I think, to have the initial inputs to build a plausible concept. The time to demo is a fraction of what it used to be, et cetera, et cetera. So all of those things are great. On the other side of the ledger, however, it's obviously much, much more competitive for talent, not for capital, but for talent. And of course, business is made up of its people. And
Mm.
so incredibly hard in that way. And talent's much more expensive. Also, what happens in every boom time is labor, talent is much flightier. It's much less committal. In Guidewire's time, the capital was extremely scarce, but the people that we enlisted to the company, they had an incredible staying power. They were not looking over their shoulder every 5 minutes to like, what else, where else can I get more options from a company that might be worth more? Like they were much more committal. And so I think those are real challenges. But the thing that's really the same, that for all these differences, my own opinion of what's really the same is that it takes the same kind of the same kind of clarity, the same kind of strategic coherence, and the same kind of like resilient endurance to really meet the market where it is and to build something of enduring value. I don't think that's fundamentally easier or harder than it has ever been. So you have a lot of people who are trying. It's much there's a much larger universe of people perhaps than there should be,
Yeah.
but certainly than there were, who are taking their shot. But I don't think the filter to build something that endures is any less demanding than it's ever been.
And the other kind of brief topic I wanted to talk about was when you look back at Guidewire investing, you've seen a lot of
Mhm.
companies. You've invested, I believe, four or five just based on the battery website. I recently watched a podcast where a startup in the insurance industry, software insurance industry, said that they work 7 days a week,
Mm.
12 hours a day. In your opinion, in your eyes, is that the standard to win, or is that the bare minimum to succeed in this tech world? And do you
Yeah.
think that makes sense with the whole work-life balance at all?
First a quick correction. I've actually made 8 investments so far,
Eight.
which is a little fast for my firm. But we're in a time again with so many companies that I think I know the company you're referring to. I won't make the guess here on air, but it is part of this time that people feel that they can outwork they can work their way to success, which is great. And I think it's one of the reasons that the founding a company is a young person's game, because you can kind of set aside every other commitment or obligation, and you can throw yourself into the fray and work with, insane intensity. I worked myself at an intensity for 20 years that was extreme.
Hmm.
And I sometimes I think there were a couple things I could have done to adjust it, but for the most part, it was necessary. I flew hundreds of thousands of miles a year, mostly within this country, to visit insurance companies. I had absolutely no division between personal and private life, and I put everything I had on the altar of the success of my company. And I think many founders do that, and that's kind of required. The one qualification I would say is when you say this is the company we're going to work at this intensity, you have to recognize that that's not going to last, because you cannot, maybe you as a founder can do that, but you cannot expect other people to work that way indefinitely. It just is, it's not reasonable, it's not realistic, it's not fair actually, because they are not compensated for that degree of risk that they don't have that ownership, and it's just not reasonable. Founders can work that way, they can work that way for their entire lives, but you cannot ask your people to. So maybe you can in the early days where you have a certain kind of excitement, a certain kind of potential. But as a company matures, inevitably you have to find a way to transition from that kind of almost hysterical intensity to something that can last. And that's not a trivial thing to do. And it takes forethought and planning how you can make it a place where ordinary professional, talented, but ultimately ordinary professionals making ordinary decisions and reasonable decisions about their life can actually find a home and contribute, without, throwing everything they have into the fire.
And then a follow-up to that would just be more on the side of obviously Claude, ChatGPT,
Mhm.
awesome, super great tools, and I feel like I'm so much more efficient at my job.
Mhm.
But I was curious from the companies that you work with, those 8 companies versus
Mhm.
obviously hundreds you see every day.
Mhm.
Do you see that they're utilizing AI to then do more work, or
Mhm.
to use AI to basically reduce kind of the workload and be more efficient,
Mhm. Well,
or
there are so
both?
many smart people right now trying to figure out the parameters of AI, where it helps, where it detracts, what the trade-offs are, what's possible, what's not. There's no question, of course, that it has reduced certain kinds of drudgery and has dramatically increased the accessibility of information.
Hmm.
These are huge. We're all in the knowledge management business at some degree, and so this is a huge boon. The killer app for AI, of course, is coding, and most technology companies have software development at their heart somewhere. And so there has been potentially an enormous accelerant in certain parts of the software development lifecycle. Again, like the time to demo, for example, has been radically collapsed. There are people who say that that there will never be need for hand coding again. That coding is now just typing, and I think that that's not true. And that's because I have a lot of pride in what it takes to build a quality software company. And I don't believe that the coding agents have changed that fundamentally. And maybe in a minority there, But I do believe that. However, certain software development roles, like say documentation, product management, certain processes, are being changed dramatically, and hopefully for the better. There are always trade-offs. There's always, you push on one thing and something else pops out and it becomes a problem. But on the whole, it's an enormous accelerant. That said, everyone has access to the same tools, right? And ultimately, there are aspects of this of building a company that are a zero-sum game. Everyone's working at trying the same things. Incumbents have access as well, and so I'd say the great hope is that there's going to be a productivity uplift that makes the whole society wealthier. It's the jury is still out.
And now jumping topics
Mhm.
into I think the most very, very exciting part of our conversation, which is AI,
Mhm.
future of software.
Mhm.
And I mean, I still argue with my buddies from Berkeley that AI collapses the SaaS model, that service as a software eats seat-based pricing, compresses margins, that made software the best business in the world.
Mhm.
Is classic SaaS changing immensely, or is that overblown?
Well, one thing that's significantly changed, of course, is that we know objectively has changed is that the rating of the value of
Yes.
enterprise software companies, my own included, Guidewire only 18 months ago was a $20 billion market cap company. Now it's a whatever 10 or 11 billion
Yeah.
dollar market cap. So that re-rating is an objective fact, and it's not an exogenous fact because
Mm.
when the equity value of a business changes, its strategic options also change,
Yeah.
and its relationship to its people and their stock options and all the rest also change. So that's a fact, and it's definitely been a punch to the face for companies that were much more confident in their position. So that has to be acknowledged. In terms of building new product, there is a point of view that look, AI is now how you build systems of work as opposed to these dumb systems of record that are now just filing cabinets. I think that's very, very short-sighted. I don't think that's true because ultimately, well, it's not quite. It's not that one is more important. There's a world where you have there's a world within every business of where you have an enormous amount of like structured transactional information,
Yeah.
and that lives in a relational database. AI has not created some other data structure that displaces the relational database for that kind of work, and that is still delivered in the kind of the same way that it was 5 years ago. The thing that's radically changed is that the management of unstructured information, which is the value of which really depends on what kind of business you're talking about. But there's an enormous amount of unstructured information that could now, in principle, be organized and automated in a way that was not really possible before, that
Mm.
mostly existed in the gray matter in people's heads. So you have to really look case by case, situation by situation. Where has this new enabling technology made a difference? Does it make a difference? And where does it not? I would argue in building something like a financial in a policy administration system for a P&C insurance company, something I happen to know well, it's almost irrelevant, right? In other areas, like helping also in P&C insurance, a commercial underwriter and analyze a huge volume of unstructured information and come up with signal and come up with a judgment, I think it's very relevant. So it's not so simplistic. It's too simplistic to say completely irrelevant or completely transformative. It depends on the specific domain and then and applying it as such. I think for the most part, though, netting it all out, that for most incumbent companies, if they get their act together, there's more opportunity than there is threat. There really is. And that doesn't mean they will all execute to that effect, but that's what I think. On the entrepreneurial side, I think it creates a very interesting opportunity to get to I call it a a beachhead. It's very difficult to land,
Mm.
like an invasion force. It's very difficult to land at a big enterprise
Yeah.
because all the terrain is kind of taken up by the incumbent companies. In the world of in the AI era, at least for some period of time, there's a chance to land with a new value proposition that maybe all the existing core system providers, et cetera, cannot. And then once you've landed, you have a chance to do more and invade further. And that's a new opportunity. But I don't believe that suddenly all the existing software has become obsolete. That would be absurd.
And more on like the AI side, because every
Mm.
business is different, whether that be a big company like Guidewire or a little startup that's
Mhm.
just beginning. Everyone says AI is transforming their business, but I personally feel like a lot of it is just marketing veneer in regards to like, oh, AI this, AI that. From what you've seen, and you obviously have seen so many companies, like where
Mhm.
is AI actually changing the underlying economics of a software company? And could you please share an example on how
Sure.
AI is either changing a product or how engineers operate or even like day-to-day go to market?
Sure. So, as I was saying earlier, I think there are parts of the software development lifecycle that are being transformed by AI for sure. An area might be like documentation of a product. There's a fantastic company which I'm not associated with. I just know of, Mintlify, for example, that arguably, the whole profession of being in documentation in a software company doesn't, either doesn't exist or it looks very, very different because, software becomes much more self-documenting right now. Example. That's what a product manager does. Before, it would be a very long time to trying to describe and write a PRD for a new product feature. Now it would be relatively straightforward, and many companies, both in my portfolio that I know of, are just requiring that product manager to define entirely the new feature and even have it demoable. And in the future, even the pull request entirely will be handled in this kind of AI facilitated or automated way. So those are big changes. Not every company is employing them to the same degree or as effectively, but the development lifecycle is looking different as it should, and I think pretty much for the better, and that's really positive. In terms of the actual capabilities outside of building software, where AI is like substantively making a difference, I think the most obvious cases are in voice AI. That's the kind of the primary modality. The medium that you and I are using right now are just voice, right? And this is just a very obvious, it's not my conclusion, it's just self-evident that there's a huge amount of work that's kind of low value knowledge work that humans have to do right now to interact with each other in very routinized situations, and that voice agents are or quickly becoming good enough to displace that. So the huge promise of labor displacement, and that's the value, at least economically speaking, is requires those voice agents and everything else and all the reasoning that surrounds that to become good enough to create really high quality consumer grade experiences. And that's a multi-$100 billion market over time as that happens, right? So that's objectively, I believe, going to happen. The much more ambiguous questions are all the other kind of knowledge work and there are open questions now in areas like legal, in accounting, in architecture, many other in management consulting, many other white collar professional services where, is it a tool or is it displacement? That has not been determined. The struggle is on. Obviously, there's low level work where it's for full replacement. There's some high level work where at best it's now a tool, but where the boundary is between those two is very indeterminate. And the value, therefore, of the software and then the value of the entire AI economy, and then the larger economy to which is now highly dependent on AI, at least at current valuations, all of that's being litigated right now. And I have my own opinions, but I'm not confident enough to say that they'll definitely come true.
And so taking into that account, what if you were founding Guidewire in 2026 from scratch with all the AI tools, all the fantastic engineers, like what's the one architectural or strategic decision you'd completely do differently knowing now?
I do a few things differently. Again, the core transactional system architecture, I don't think that would be fundamentally different. I mean, obviously, it would be a cloud native product. The cloud didn't exist in 2001 when we co-founded the company. And then Guidewire transitioned into that, over the last 6 years. So that's obvious. But in thinking about the product, I would now it would be a much more expansive and kind of composite decision about where is the structured data, where is the unstructured data, where are there decisions that we can dramatically facilitate, by finding signal in unstructured information, and where does that have to translate ultimately into a deterministic transactional decision, and therefore the scope of the product would be kind of composite in trying to put those two things together. In Guidewire, in the product as it exists and was designed, it was primarily a transactional space, but it offered, a much more limited unstructured space where you could put things like notes and judgments and so forth. And I think that latter area would be much larger, much more AI facilitated than it is right now, than we would have had the means to do at the time.
And kind of the last few questions before we wrap up, more rapid fire questions.
Sure.
Would you rather invest in Anthropic or OpenAI, and why?
Well, this is now just a personal investment decision. I wouldn't invest in a company right now because I think that they are for two reasons. Number one, I'm not yet persuaded that their businesses are defensible and in the way that companies with trillion-dollar enterprise valuations need to be. And we don't know their underlying real economics yet. We're going to learn a lot about that once they file to go public.
Yeah.
But I think that that's just as an investment decision. I think they've been radically overvalued. And then secondly, I think that they are both companies in a state of extreme chaos right now. I mean, and I know a little bit of what that can look like, not for those businesses specifically, though I'm 1 degree or sometimes less of separation from people in those companies. But I just know what it's like when during a boom time, when astronomical amounts of equity value are being kind of created and traded around. And you're starting 50 different business development discussions, and there's partnerships, and then you're in the press every day. Like things are just completely chaotic. It's impossible to get real work done. And I think that that's the case in both of those and in multiple other companies. And it's a rare organization that can survive that and come out coherent on the other side. I've seen what it looks like when that doesn't happen. That was the first company I worked for when I came to Silicon Valley. And, I'd want the dust to settle a lot before I would, make a personal decision there.
That's a great take, Marcus. I never really thought about that because I was just like, okay, which one's better? All right, Claw's better. I'm gonna invest in that one. Okay, that makes a lot of
Yeah.
sense.
Well, there's been a lot of back and forth, as you know, and that's very
Yeah,
hard to call right now. Certainly, Anthropic feels ascendant, but that could change, right?
most definitely. And then, yeah, one point I wanted to touch base on was you almost became a philosophy professor. My one of my guests before was an engineering professor at Iowa State. He ended up starting a company called Workiva. He was
Mhm.
like, okay, this is fun. I'll keep doing it. Similar to him, but a little different, more on philosophy and Marx. You said starting Marx made you a better entrepreneur, that capitalism's sharpest critic gave you the tools to actually win at it. So I guess a bit of a contradiction. Does building a $10 billion company prove Marx wrong, or does it prove him right? But just with you on the winning side.
I don't think he could possibly have imagined what happened years later. And
Yeah.
to be clear, I'm not a Marxist. That would be absurd, or I'm not exactly a fan. I just think that he was incredibly astute in a couple of his critiques of capitalism. And one of them was that, to oversimplify, essentially, is that he believed that capitalism had the seeds of its own destruction within it because there's a certain logic that would just keep getting crazier and crazier, more and more wasteful, more and more extreme, until eventually the happy day would come for him when it all fell apart and people would realize there's a different way that we can organize things. But without talking about what's on the other side of that, I can say it does feel like that at times. It feels like, and when I talk to other people let's say in the risk capital business of venture capital, et cetera, there's a sense like we're putting more and more money, like astronomical amounts, into at ever escalating valuations in pursuit of ever higher levels of growth. Everyone has a sense this can't really last, it's not really sustainable, this is too extreme, etc. But there's a logic to the system that makes that kind of impossible to resist. And it just keeps, so it's more systematic, that it's not individual people being greedy or being irrational. It's everyone within the logic of the system behaving rationally, that in the aggregate leads to things that get kind of crazier and crazier until there's a crash. Now, I happen to believe that after such a crash, there's the period of reset, and then there can be a rebuilding. Maybe the crashes get big enough that eventually they become devastating. Who knows? The other thing that he believed, and that we see elements of, is that there's a kind of extreme and structural separation, between the owners of capital and people who don't have ownership. And we do see that. And you see people, maybe even on the left and the right in our politics, worry about that you have a kind of permanent underclass of people who become less and less relevant, have less and less ways of participating economically and politically, and that creates an extremely unstable society, right? And you don't have to believe that you're going to have a revolution to be worried about that. I'm worried about that. And it's not just an American problem, it's a global problem. Every rich company, a country, almost all of them, not Japan maybe, but almost every other, is struggling with a deepening instability, because there are between the people who get to participate in the economic system and people who don't.
No, 100%. And I guess for that, a lot of my listeners are college students, Gen Z, and they're staring down the job market in this pit of AI and that whole threat.
Mm.
How would you advise young people on building lasting careers, but also just that approach, especially now?
Yeah, well, here I'd be optimistic because I do not believe that AI, has obsolesced the need for human work. In fact, quite the opposite. In fact, in the main killer app that we know that AI is good for, which is coding, there's more demand for engineers, right? We all know this. So the idea that has been promulgated by some reckless and irresponsible people that this is going to completely wipe out human knowledge work, I think that's absurd. There's no evidence of that, and we are an infinitely adaptable species that will find, new ways to incorporate and thrive. So that I all believe. Now, translating that into advice for younger people, I've been completely consistent in the same advice. It's the same advice I was given as a young person, which was the only thing that matters is that you're around the right people. The only thing that matters. Find the smartest people and get to them and be around them, and good things will happen. Don't care about where you have to live. Don't care about what you're paid. Don't care about stupid office perks like massages and free lunches. None of that matters. Nothing matters when you're young, other than be with the smartest, highest potential, high quality people and find a way to work with them, and good things happen.
Amazing. Marcus, really enjoyed the conversation.
Mhm.
Thank you so much.
Great. Mm.
And yeah, I think everyone will learn a lot. So thank you so much for
Thanks,
your
Liz.
time.
I enjoyed it too. So long.